Hey, welcome to the Explainer. When a trade war kicks off, it's kind of like dropping a stone in a pond. Today, we're going to follow those ripples, from that first splash of a tariff all the way across oceans to factories and farms, and right into the heart of the global financial markets.
Right? It's a question that's all over the headlines. But the real story, well, it goes way deeper than just who's paying a tax at the border. It's about a complex, interconnected shockwave that changes pretty much everything it touches.
So let's do it. Let's follow this shockwave. We'll trace its path right from that first policy decision and see what kind of massive and often pretty surprising global chain reaction it sets off.
All right, we're starting right at ground zero. The moment a new tariff goes into effect. This is that first impact, the stone hitting the water. Everything else we're about to talk about starts right here.
And whoa, the first effect was immediate, and it was big. Chinese exports to the US, they plunged by more than 16%. But here's the really interesting part. It's how they dropped. It wasn't really about companies slashing prices. Nope. They just stopped shipping as much stuff. The sheer volume of trade just collapsed. But, businesses don't just sit there and take a hit like that. Of course not. They pivot, they adapt. And it's those survival strategies that create the next wave of ripples across the global economy.
And this is where things get really fascinating. We see this split, like a fork in the road. On one side, you have these super innovative, R&D heavy firms. They use their tech advantage to pivot, finding brand new high-value markets for their best products. But then, on the other side, you have firms that did the complete opposite. They actually downgraded their product quality so they could compete on price in less developed countries. I mean, two totally different solutions to the same problem.
Okay, now if you think that was a shock, look at agriculture. It was absolutely brutal. The US trade war made American soybean exports to China just plummet. We're talking a 75% drop. It was a massive, massive disruption that showed just how fragile these super specialized supply chains can be when politics get involved.
But what's really incredible is how a crisis like this can force innovation, and at lightning speed. The whole agricultural sector had to get creative and fast. They started looking at different crops, they fast-tracked amazing new tech like gene editing, and they started building smarter, tougher supply chains just to be ready for the next storm.
So all this chaos on farms and in factories, well, it doesn't just stay there, right? It was inevitable. It spills over into the financial world. All that uncertainty, all that disruption, it's going to find its way to Wall Street.
And wow, when you look at the data, it is just crystal clear. This wasn't just some background noise for the market. The trade war was directly responsible for over 30% of the swings in both stock prices and treasury yields, and that's a key indicator of economic confidence. So yeah, it was a massive driver of market volatility. And this quote, it just hits the nail on the head. Suddenly, how Wall Street valued a company became a direct reflection of its supply chain. The more you relied on China, the harder your stock got hit. It's that simple. Your real-world business and your financial risk were completely intertwined.
Okay, but here's a twist I bet you didn't see coming. In the middle of all this chaos, some of those global financial connections, they actually became a stabilizing force, a bit of a buffer in the storm.
So how did that work? Well, foreign investment flowing into China's bond market during this time actually helped some companies out. It meant lower borrowing costs for them, and it helped keep the economic engine running. It just goes to show that even in a trade war, global money can act like a really important shock absorber. Okay, so now let's get into the human side of things, the psychology. Because this is all about how people, investors, from giant funds down to you and me, reacted to this constant stream of news and uncertainty, and how their feelings actually started driving the markets.
This timeline here is so telling. Look at that huge spike in 2018. That's financial information just flying across borders as the trade war heated up. You could almost say that event sort of primed the markets. It made them extra sensitive for the even bigger shockwave that was coming with the pandemic in 2020.
And of course, in today's world, you have to talk about the echo chamber effect. Think about it. During stressful times, social media just blasts the same news over and over. Investors see it so many times they start to think it's new information when it's not. And that feedback loop, it's like pouring gasoline on the fire of market volatility. Which brings us to a really crucial point. A company's culture, something that feels so intangible, it can become a very real, very tangible defense during a trade war.
The data shows that companies with strong, innovative, transparent cultures were just more resilient, plain and simple. Their stocks held up better, and they had an easier time getting financing.
All right, for our final section, let's pull back. Let's look at the landscape now that the initial shockwaves have kind of settled. What has fundamentally, permanently changed because of all this? Well, the long-term results are just full of these fascinating contradictions. First, the environmental side. As companies shifted production out of China, sometimes to less efficient places, global emissions actually went up. But then, on the flip side, this whole crisis forced companies to build way smarter, more robust supply chains, making them stronger for whatever comes next. And finally, all that protectionism, it basically lit a fire under R&D departments, creating this huge pressure to innovate and find new markets.
And that really is the main takeaway here. A trade war isn't just a single event that happens and then it's over. No way. It's a catalyst. It permanently changes trade routes, it speeds up the adoption of new tech, and it completely rewires the economic connections between countries, companies, and all of us. So that leaves us with one last really big question to think about. After tracing all these ripples from a single tariff all the way across the globe, you just have to ask, in a world as connected as ours, can any trade war ever really be local?